All right, so welcome everyone. This is a new podcast that myself and my friend here, MyDailyGains, are going to be starting called Day Traders Off the Record. And for our first episode, we're going to be doing a little interview on him, his journey through trading, how he found his edge and his niche, and just asking questions and having conversations about trading. So once again, this is MyDailyGains. He's been trading for about 4 years now, and he's actually a moderator within the Trade League chat room as well. So just to kick it off, welcome to you. Good to have you here. And first question I have for you is, how did you fall into this journey, this career of trading in general? Was it an advertisement you saw? Was it a video, or you just learned about trading through other means? What was it?
So thank you so much for having me as the first guest here on this new podcast. Very exciting stuff. Looking forward to seeing where this goes. And I kind of got into the stock market by accident, which I'll kind of explain here. It was actually the fall of 2017, and a buddy of mine was telling me to get in on these cannabis stocks that were starting to run.
Yeah. I remember that.
And I didn't really know that much about the stock market at the time, but I listened to his presentation on all these various companies and what they're doing, and I did my own due diligence as well, which is obviously something that everyone needs to do if you're going to be making an investment or a long-term swing trade.
Mm-hmm.
And I took money out of what someone considers safe stocks, like telecommunications and banking and that sort of thing. And I put a bunch of money into a couple of those cannabis plays. And I watched the portfolio grow exponentially over a couple of months. And I said to myself, wow, this is awesome. If I could do this, one time, then why can't I do that over and over again with other stocks? And so basically that holiday season in December, I spent 2 or 3 weeks just researching on the internet, because I knew day trading was the thing, but I hadn't ever done it up till that point. So when you start Googling how to day trade, you know how it is. You see the same people over and over again, the Tim Sykes, the Ross Camerons of Warrior and that sort of thing. And I didn't join any of their communities, but I did soak up a lot of the videos on YouTube.
Mm-hmm.
And I find that for anyone who doesn't know anything about day trading, it's actually not that bad, because you get to learn the lingo and the language of day trading. Yeah. It's a language in itself. But then when I dove deeper into YouTube, I actually came across you. Mm-hmm. And oddly enough, you had a video that was saying what your top 5 or top 10 cannabis picks were. And I had my investments up. Exactly. And I had my investments already going. And that led me to watch some of your other videos. And I thought to myself, like, compared to those other, gurus, you weren't doing this like flashy marketing kind of thing. I found you were just more real and down to earth. And after watching 5 or 6 of your videos, I said, hey, I'm going to join this community and see what's going on. And that's kind of my start into the day trading world.
Cool. So you said that you had moved money off of these telecommunications plays into the cannabis plays, meaning that you already had an account, or how did that account start in the first place? Was it a retirement account? How was it funded in the first place?
Yeah, and that's a good question. And a lot of people, they see someone start with like 15 or 20 grand and they're like, well, how did you get that money? And it's obviously a very valid question. But in my case, I had a real estate investment or 2 from early on, which I basically just saved money for my whole life. Like, I wasn't that kind of guy that was going out on weekends and buying bottles at the club and, just wasting money kind of thing. Mm-hmm. I was very frugal and good with saving, which led me to buy a property at a very, very young age, pre-construction. Made a decent chunk of change from that transaction. It was like a 3 or 4 year thing. And with that, I was able to, not with my own expertise, but go to someone at the bank and say, hey, I have some money. I'd like to put it into a portfolio or a fund. So that's what I did with those real estate gains. But when you invest in telecommunications and banking, it's really just like watching paint dry.
Yeah.
You know, you can't log in every week because really there's not that much going on in terms of the way of there's no volatility.
Yeah.
So when I put that money into the cannabis sector and kind of seeing it skyrocket after like a few weeks, you're kind of just mind blown. And that basically got me to start researching how to day trade from there. Yeah.
So that means when you started out, you were mainly long biased, of course, right? Because you're investing into these long-term swing trades, and now you're mostly known for being a short seller. So it's kind of interesting to see that massive shift. What happened after those cannabis plays? Like, did you sell on time? Like, did you cash out at the appropriate time, or how did that go? Like, how did you navigate a whole new market like that?
So there's a lot of great questions in there. And again, at the time, I didn't have really any experience at all. So selling 100% partials or scaling out were terms that I was just not even aware of.
Yeah.
But the buddy of mine that got me into the cannabis sector, he was kind of saying, okay, well, on this date, they're going to the New York Stock Exchange, or on this date, they're going to be announcing their earnings, this and that. So I kind of had a little bit of guidance from, this guy was in from like $3 or $4, and, he's well on his way to $1 million in that position. And so, it's pretty nuts. But to have that guidance, I did manage to sell most of it on the way up, and I sold the final 20% of that position eventually at break even. But I was able to make a good chunk of change from it, and I actually sold $3 off of the all-time highs right before the bubble burst.
What stock was that?
So that was CGC.
CGC. How high did that one go? Do you remember?
On the Canadian market, it topped out at $73 or $76. Wow.
Dang.
And I sold a fifth of my position, and my average was about $22. So
wow, that's really good.
It was definitely life-changing, and it also allowed me to comfortably fund my day trading account afterwards. Instead of, the expression is, if you're going to be day trading, you should trade with money that you're kind of like willing to lose.
100%.
So to be able to start trading with money that was just created out of thin air through the stock market, that's how I got started. And the funny thing is, as you mentioned, I did start out, going long, and I was in your community from January or February 2018, somewhere around there. But personally, I was not able to kind of get in tune with your strategies. And that's the funny thing about trading, is that just because the strategy doesn't work for me doesn't mean that it won't work for hundreds of other people, because at the end of the day, it's all about your personality. Yeah. And I just thought that these small cap stocks they're just struggling companies that are quote unquote trash. So I couldn't come to terms with like buying shares of it. You know what I mean?
Yeah.
And also I got, like a lot of new traders, I got caught in that issue with buying breakouts. And so you went through that, but you kind of tweaked your strategies accordingly to never do that again. Whereas I tweak my strategies, well, if every time I'm buying here I'm losing 7 out of 10 times, then doesn't that mean that if I'm shorting here instead, my win rate might also be 7 out of 10,
Totally.
And so that kind of led me just down the other, the dark side of trading. And I started researching that a little bit more. And I did find like a mentor or two in that industry, which they kind of helped me with some strategies. And then I kind of did my own trial and error through tracking and journaling. And so my style has evolved over the years, and now I would call it somewhat of a fusion kind of short seller. By fusion, I mean, I might be interested in a quick scalp if there's going to be a good chance of like a 40, 50 cent wash drop, but I might try to retain some of the position for the potential all day fade or for the test of lower levels. Whereas when I first started shorting in like April, May of 2018, my problem was I would just take everything off the table 20 or 30 cents later. And I'm sure you remember.
I remember that for sure. Yeah, I remember that.
Yeah.
You were really good at hitting those top shorts, but then you would just lock it up very quickly. And that's a problem that a lot of new traders have, where it kind of has to do with that fear of, you know, missing out on those profits if you don't lock it in quick enough. Now, before we get into more of that, now through all this, when you were starting off with day trading, how long did it take you until you realized, okay, I don't want to be long, I want to try short selling instead? And like, how did you come to terms with just like throwing away that knowledge of longing and then choosing to go short? Because that's something that I kind of was looking at first long ago. Was I was, you know, having struggling time with going long, and the main concern I had was, you know, like leaving all that info behind and then going into short sellers. Like, how did you justify that big switch? Because this is a really big switch to do.
Right. So it kind of goes in stages. So when I started getting a little bit frustrated with getting dumped on the breakout side of things and having to use hotkeys to scalp for 10, 20 cents and paying $10 commission in and outs.
Yeah.
I was getting frustrated. This was 2018, folks. Don't forget, it wasn't a free commission yet. And so that was kind of frustrating. And when I started calling my brokerage firm, which was like a Canadian brokerage firm, and saying, hey, do you have available shares to short of this stock? The answer, literally 99% of the time, was no, we don't. Like, maybe you were able to short, I don't know, Netflix or a large cap or something like that. But in the small cap sector, it was virtually impossible to short a stock with a lot of these brokerage firms. So I started doing my research and started realizing that, you know, there's only a handful of brokerage firms out there that will cater to this niche. And so I said, you know what, let me just open a small account with them, because if you're not in the United States, you don't necessarily need $25,000 to start trading. So I funded a small account offshore, and you know, I had some mentors on the short side, and I just kind of grew things from there. I learned lessons the hard way, you know, not to average up, not to add to the loser. I learned all those things by basically getting slapped in the face, the market telling you simply just can't do this, you're going to lose money. And to get back to one of the things you asked, I wouldn't say that I ever threw away the knowledge from going long or from trying to buy breakouts and that sort of thing, because everything that you do in the journey, it never goes to waste. You basically, it's all screen time, right? Because I was there every single day, every single morning for hours on end, watching these stocks play out, watching how a 1 million float stock trades differently than a 30 million share float stock, watching how a stock that's going to forecast to put in 200 million volume on the day trades compared to a stock that hasn't put in much volume at all. And so just by sitting there and watching time and sales and watching hundreds and hundreds of stocks play out, I mean, nothing is a waste.
Okay.
If that makes sense.
Yeah, no, definitely, it makes sense to me. So as far as the strategy that you've kind of built up now and the niche you've built up now, how would you kind of label your trading? Is it mainly technical, or do you have lots of fundamentals like thrown in there? Because I know that lots of short sellers like to read filings to see if there's offerings on the table, warrants on the table. Is that something that you do often, or do you mainly focus on reading tape, reading level 2, looking at resistance and that stuff?
Yeah, that's a good question. And while I do try to have a general awareness of the fundamental side, so the filings, It's not the most heavily weighted thing. It's more like an added bonus. Like if I find stuff myself, or if I hear chatter from other contacts that, okay, such and such company has like a $75 million at the marketing offer that they're allowed to just drop anytime, it might kind of hint at the fact that today's gap up may lead to some possible dilution. So it helps, but my trading is still based on mainly on the technical analysis of the chart, as well as kind of real-time momentum, and also the shift in psychology, the shift in when there's a moment when the long bias traders are kind of sitting there wondering, oh no, what's going on? Will this stock ever come back to those highs? And kind of blending that fusion. But yeah, first and foremost, the technical analysis. So something that, and it's the same for you and a lot of people, but we look at the daily chart for the past year, for the past couple of years. If it's in the midst of a run, we could be looking at yesterday's action. We could be looking at the last 5 days, levels from the last couple of days. And something that's pretty important for short sellers is what's going on in pre-market. I'm sure you're aware, especially in 2021 and 2020, there's a lot of short sellers that are trying to step in front of the pre-market high. A lot.
Yes. And I love it. I love it.
Yeah, because it creates this little battle between like our parties, where it's like, if this thing rips above the pre-market highs and holds, we're all bailing out, right? The smart ones are bailing out. But what's beautiful about trading is that there's cycles and generations of new traders coming into the market. You know, the GameStop people, the stimulus check people, all of that. And you have these new traders that are joining the short side as well. And they haven't gone through that learning process of learning the lessons the hard way. So those traders, they're adding above pre-market high, they're averaging up, they're trying to get the next whole dollar figure, and they keep on losing and losing and losing. And that's when the likes of you, Aston, Robbie, Freddie, and others, you're setting your limit, your buy orders there, and you're adding to the squeeze as they're getting stopped out. So
yeah, whereas for me, it's definitely been an interesting, ever since, you know, COVID hit back in March 2020, everyone lost their jobs. A lot of new people came into the market, and you could say that a lot of them went, you know, long buys because it's the easy thing to do. But at the same time, a lot of guys went to go short, and, you know, like you said, they didn't learn those hard lessons of knowing when to stop out. Because mainly, like, one of the biggest things with going short is that you could lose everything on one trade. It's not as easy to do so with long. Like, yeah, it's possible, but it's not as quickly to happen. So it's very important for short sellers to kind of understand when to be wrong. So next question I have for you is, like, say, like, how did you accept the fact that you wouldn't be right all the time on most trades? Because that's something that a lot of traders have a very hard time doing. So, like, how did you kind of rationalize that fact that, like, you have to cut losses on some trades? It's never going to work out. You can't just hold and hope, because if you do that for, you know, your position, you could blow up in one trade and you're wiped out completely.
Yeah, I definitely hear that. And there's a lot of traders that learn the hard way and they lose everything. Or you hear stories of guys that, you know, they made like 100 grand in their account, and then one trade kind of brings them back to PDT. And it's really devastating to hear those stories. But so one of the things I did was I never really worked with like a very, very large account, because again, in Canada, there's no PDT. So this is a fun fact, but I actually never used a day trading account that had more than $10,000 US in it, because I didn't want those kind of things to happen to me. I didn't want to grow an account to 100 grand and then in one bad trade lose it all. So a couple things that I did was I set a max daily loss at the brokerage firm, which it's just a figure that you choose. And essentially it's supposed to protect you from those possible disasters. So let's say you're having a bad day, like something could be going on in your personal life that may affect your trading. And if it does, and you take a bunch of poor trades and say you're down an amount of money that's a lot of money for considered a lot of money for you or your trading account, your brokerage firm just cuts you off and says, that's it, that's all, no more trades for you. So that's there to protect the traders. And also, to rewind a little bit, if we go back to the summer of 2018, I don't know if you remember this, maybe you do. There was a couple of stocks, AWX and GBR. And these stocks, again, we don't have to like drop names or anything like that, but there was rumors of specific groups of people based out of the Bahamas that were like buying up the entire float of the stock, which it turns out it was perfectly legal because they filed the paperwork.
Yep.
And it caused these low float stocks to go from like $5 to $30. And this was kind of, because I wasn't around during the shipping fiasco of dries.
Yeah, that was like 2016, 2017, wasn't it? I don't remember what year it was, but yeah, I remember. I mean, everyone knows dries. It went from like 3 to 100, and then it brought all the sympathy plays along with it. Tops, ships, all those names. It blew up. A lot of short sellers got crushed on them.
That's right. So yeah, I had heard about those things, but I wasn't around at the time. And when I saw like the summer of 2018, a couple of these things going, it was my first experience of seeing like a real parabolic mover, or there was a few of them. And on those days, on those trades, there was 2 days in a row. The first day, I forget the order, but on one of the days, I lost the most amount of money that I ever lost in day trading. And the next day, I made the most money that I ever made in day trading. And as you know now, those two things shouldn't happen on back-to-back days. It's just not consistent. It means that you were gunslinging. It means you were taking too much risk. And that's exactly what I was doing. I was averaging up and I was hoping for the market to bail me out of a position. And the first time it didn't. So I was max daily lost out. And the second time it did. But if you're sitting in front of your screen and you're saying, oh, please God, there's got to be a crack in. We've got to take those $7 bids out. Otherwise, it's going to be another max daily loss. If you're having that kind of moment in front of the screens, and there's something terribly wrong with your behavior and your trading. And then I found like the Mark Douglas books and the sample size approach. And it's not about your next one trade, it's about your next 100. And I refined my sizing rules. So I'll never be in more than what makes me uncomfortable. I'll never lose more than what makes me uncomfortable. Even within a day, I've taken some, and this is not my original idea. This comes from, he doesn't sell a service, so it doesn't matter. I think his name is Stan Guzman. He's a 7 Points Capital prop firm trader.
Yeah,
and
I've heard of him.
Yeah, and he had this thing where, say you have a max daily loss. If you divide your max daily loss by 3, it means that you could have 3 bullets or 3 cracks at the day. So if your setup is forming and you're going to take a crack at that trade, if you lose that trade, well, you still have 2 more possible setups, 2 more bullets in the holster for you to take another trade, whether it be on that stock or another. And so I kind of modeled my risk management style off of this concept. And ever since doing that, and again, there's tweaks based on various factors, but it's just been a game changer.
Very, very interesting. So as far as those 2 trades back in 2018, you mentioned averaging up. Is that something that you still do to this day, averaging up on the front side, or do you mainly, wait for that kind of exhaustion candle and then size in?
This is a great question. And actually, you know what? There was someone in the, like, if you're ever going to get to the community questions, there was one in the community that actually asked this. So we could address that one right now. I think it might have been Lewis. Or, I think hopefully I'm saying his name right. He asked this question, so shout out to him. We'll answer it. So I only consider something averaging up if it wasn't. Sorry, this could be an edit. So we'll answer this. We'll answer that question about averaging up. So averaging up is only a negative thing if it wasn't part of your original plan. So if I'm scaling into a position and part of the entries are higher than the first entry, in my opinion, it's not called, I guess it is averaging up, technically speaking, but it's not actually averaging up, because I consider averaging up like you were not willing to take the loss. So say you had 1,000 shares to allocate to your position, and you have a $7 average, and you were supposed to cut your loss at $7.15. Mm-hmm. For argument's sake, in this example, it rips by $7.15. You didn't have your stop in place for whatever reason, which you should have had it. And now it's going $7.50. Now it's going $8, and you're saying, okay, well, let me add another 1,000 shares at $8, so my average will be $7.50. That is averaging up.
Yeah.
But because it wasn't part of your original plan, it's a huge error. Because not only is this stock breaking out and you're not cutting your loss, you've now doubled your exposure. You're now 2,000 shares short with a $7.50 average, and the price is already at $8. So definitely, if you just cut the loss at $7.15, you would have been down $150. Now you're down what, $1,000, and it's breaking out. Like,
yeah,
you see how those two things are just totally different.
Yeah, so like the way that I always answer that question is that whenever you want to kind of, size in more, you should only be doing it in a sense to where, like, if you didn't have a trade already, you would still take that entry. You know what I mean? Like for me, the only times that I ever like size into my trades is if it's a point where if I wasn't in, that's where I would be buying regardless. Like it has to be an actual proper entry, not just, for my case, averaging down. What I've learned over time is that like when I do like recklessly average down, usually what I'm doing is I'm just trying to find the bottom, like have my average drop down to kind of save myself. And now what I do is I don't really average down anymore at all. The only time I ever size in is when I'm winning a trade. And like for me, like I said, is like, for example, let's say that I buy a stock in like the first bounce off of daily chart level. At the time that I will average up, like is when it has a break over pre-market high, then I use that level like to size in more shares. Like if I wasn't in the first place, that's what I'd be buying anyways, Yeah, like the main thing is that you just want to make sure that like you have to have it, number one, like be a part of your plan and not just, recklessly sizing because you want to save yourself. That's the most dangerous thing. You have to make sure it's, sizing appropriately according to your overall strategy. Which
That's it. The people,
lots of short sellers will just, size up recklessly because they want to be saved by a flush. When if they do that and it keeps running higher and higher, now they have, thousands of shares at a terrible average, and like no matter what happens, they're gonna have to either take a loss or get stopped out by the market. So yeah, like the main thing is, you have to make sure you would only be buying or selling there in the first place if you didn't already have a position. That's like the most important thing, I think. Because then it's just a bad trade.
No, it's like the market could reward bad behavior and bad habits by bailing you out of a trade. And that's what's so dangerous about trading sometimes, is that you might do every single thing right. You might have followed every single rule that you have, and you still have a red trade or a red day. But in my opinion, is that I'd rather have a red day like that than, break rules and whatnot. And for the trader that breaks these rules and averages up recklessly or averages down recklessly, hoping for a bailout, it might work 9 of 10 times or 4 or 5 times. But the problem is that the one time that it doesn't work, it'll be enough to take you out of the game. That's basically the problem. And I want to ask you something, actually, because this is something that I struggle, I guess, with this particular notion, but using you and some other prolific traders in our community, you seem to be able to add to winners with such ease. But when you add to a winner, your average, your cost basis is going up. Psychologically, how do you deal with the fact that your average is going up, knowing that, okay, one big sell off and you could be kind of back at square one with your average? I have a hard time with that.
Yeah, so I mean, it just comes down to the fact of being confident within the overall move. Like for me personally, the only times I ever want to average up is when I have really good confidence that there's a big short squeeze occurring or there's a big catalyst that's causing this big move. But really, like for me personally, when I do average up, like yes, my cost basis is averaged higher, but no matter what, there's a plan in place in case it does fall apart. Because like the main thing for me is that like when I am, sizing up, like you still don't know if the trade will be a winning trade, which kind of means that you have to almost, like raise your stop level higher, because if you don't and it falls apart, now you have a lot bigger loss than you kind of expected, right? So for me, like for example, if I have, sized into a trade at first at $3, it breaks out over pre-market high at 350 and I add using that 350 level, like now the max level that it has to hold is at 350 level, because if it breaks below that, now the overall thesis is broken. Like now the whole chart's kind of broken down, so I have to just leave the stock knowing that now it's not going to be a solid trade anymore. So I don't know if that helps explain it correctly, but if not, ask away again.
Yeah, no, I think I know where you're coming from, and I think one of the reasons why I struggle with that is because I generally get like pretty good averages compared to highs of day or lower highs and that sort of thing. And when a stock falls apart and like I may have the opportunity to add to that position, I have my weighted average calculator out and I'm running the numbers. I'm like, okay, well, if I add another third back here, my average is going to drop, especially if something has a lot of range. I'm talking range of like a couple dollars in a short time frame. And let's say something sold off by $3 a share. The bounce might only be $1 a share, but if I'm in near the top, I'm cutting my average like pretty much in half from where it is. Yeah. So in order for me to continue making money, I have to, with high certainty, believe that this is going to be an all-day fader. And as you know, with current market conditions, once the bottom is actually in place, it's not unheard of for these things to actually reclaim altogether. So the strategy is, I almost sometimes rather keep my initial entry and unwind it and have trailing stops. And but everybody's different, because sure, there's more money to be made with adding to the winner. I just have to continue to work on that. So
yeah, I think one thing that helps me have confidence in having those high conviction ads is mainly because for me, like I like to hold for that big move.
Yeah,
which allows me to kind of justify the risk of adding into that size. Because like for you, for example, you're more kind of scalpy in nature, so yeah, I can imagine it's hard to kind of give up that good average when you're only going to be locking in $0.50 down. But if you can like learn to kind of know that, okay, now it's backside, I'm sizing into backside, and just have patience to kind of ride that multi-dollar move down, like maybe you'll start to see that having that ad makes a lot of sense, because you are sizing into backside, so there's not a high chance of it breaking higher, and then at the same time you're sizing in to get that multi-dollar move downwards. Like for me, for example, when I add into like a breakout over pre-market high, it's because I'm like looking for that 100% move higher than it already is. So like the risk isn't that big to me, if that makes sense.
Yeah, no, that makes total sense. And I think you mentioned it in one of your earlier replies. You could always have that, whether it be a trailing stop, which guarantees some kind of gain, or even in the very worst case scenario is you leave that trade with $0, you know, and that really isn't the worst thing in the world. Like I'm sure it's it's probably a lot worse for many other people, you know, people who are chasing, who maybe buying the breakouts or these shorts that are trying to add if the pre-market high is breaking above. So what I noticed with you and your trading over the past couple of years is you've really honed in on a particular niche and style. And so because you've been able to really work out those kinks and really develop it into something that when it works huge. And when it doesn't work, it's really only a paper cut. And I think something that a lot of people are too focused on in trading is like win rate and that sort of thing.
Totally.
And I think something that you've been able to really convince our community and probably the public and those who follow you who haven't joined the community yet, you're convincing them that like you could be a big time profitable day trader with like a 30 to 35% win rate. And a lot of people struggle to wrap their heads around that. And I think you're doing a great job in proving those people wrong.
Yeah, like over the past 3 months, my win rate, let me check right now. My win rate over the past 3 months is 42%. I'm right 42% of the time. But the main factor is that like my winners are 6 times larger than my losers. And that's the key factor, is you have to not only focus on win rate, but focus on how much do you make when you're right versus how much you make when you're wrong.
Yeah.
Which is like one big thing for me when I was, you know, like learning, you know, breakout trading and all that stuff, is like the main thing I cared about was, you know, being right all the time. Because I was, you know, trying to make money as fast as I could, which isn't something that you need to do when you're starting out. Like one big turning point for me was just realizing that, you know, you don't have to be right all the time. The main thing is you have to make sure you're managing the risk appropriately on every single trade. So the one thing I wanted to ask you, you know, like near the beginning was I'm assuming you had a job like while you were learning how to trade, correct? So
yes.
How did you manage the time between working a job and also at the same time trading the markets? Was it because you just had like a free job that made you not work a 9 to 5, or like how did you manage the time between working and, you know, watching the screens?
Yeah, so basically when it comes to that sort of thing, in my particular case, I was able to do other work from home, which is very key. Like if you're going to be a day trader, obviously you need to have that battle station set up at home, you know, all comfortably with monitors and all that sort of thing. And for me, being able to, you know, do other work later in the morning, later in the day, consult for businesses, help other businesses and individuals run their social media. I don't have to be doing that at 8:30 in the morning, you know, it could be done whenever. So I was in a fortunate position in the sense that every single day at 7 or 8 in the morning, I had a little bit of time at home to be in front of the screens. So that afforded me to be able to take, you know, the opening session. And what a lot of people need to realize is that you actually don't have to sit in front of your computer from 7 a.m. to 4 p.m. to make money as a day trader. Obviously, a lot of people know that the first hour is very, very volatile. It's where the biggest volume is. So if you just kind of show up to the pre-market, you look at the runners, you look at the news, you map out your levels, map out your game plan, you see what happens at 9:30. Are your levels hitting? Are you able to take an entry? Once you do, are you able to set those stops and targets? And then if you have another job to go to, you're able to go and do that. There's a lot of people at TradeBuddy who work afternoons, who works evenings. And so that's basically it. If you can't be there though, like honestly, pre-market and open to get that screen time to see what happens, I would recommend more like swing trading or longer term holds. But even as a day trader, like someone who is just going to show up to the 3 p.m. power hour or after hours, it's like you're not really getting the feeling for like the 9:30 opening bell. It's where money is being made and lost. Like you have to be there, you know?
I totally agree. It's kind of one of those harsh realities that people don't want to hear. But I mean, almost if you want to be a day trader, you have to find some way to make time to show up in pre-market and the first few hours of the day. Because if not, yeah, you can watch on demand, like you can watch recordings of the price action, but if you're not there, like what's the point of even watching that stuff in the first place? So I mean, yeah, like one way to kind of sidestep that is to more look at swing trading, which is still, extremely profitable if you do it right. It takes more time with the moves to occur, but yeah, like if you want to be a day trader, you have to kind of find some way to make that time. And for me, when I was starting out, I was back in college, and what I did was just make sure I had my classes all started after 10 a.m. Make sure I have the first 4 hours of the day, like make sure I had like the morning time just to watch the markets. Even when I was in class, I was still just watching the markets on my laptop anyways, because I was just so driven and so focused on learning how to make this work for me.
I think that people, if you're able to have another source of income via part-time work or other sorts of things, it's actually going to help your trading, in my opinion, because it alleviates the pressure. Too many people, they come into this market and they're like, oh, I'm giving myself 2 or 3 months to be profitable. I have to make money, or I won't be able to quit my job, or maybe they already quit their job and they're like, oh, I'm going to make this work.
It's a really bad spot to put yourself in. Like if you're a new trader and you have a side income, keep that for as long as you can until you're absolutely certain that you can survive off day trading. Because number one, like you said, it's gonna just make yourself not as stressed, like to make money today, which is one big factor for people losing, is they focus on making money, not making good trades. And when you have a position where you are, like trading to make, like you're trading to make your monthly rent, you're going to always be worried of taking that risk because you don't want to take the loss, and you'll be just worried of missing out on those profits, so you lock it in super, super fast. So yeah, it's a very good point that you brought that up. Having that side income is super, super important when you're learning how to trade.
So even if you're at a point where you're like profitable and your account is growing, this and that, even at that, I would still, whatever else you're doing to earn income, I would still keep that for a little while, because there are such things as like hot streaks and things of that nature as well. So even me, like 4 years, it's my 4th year into this journey, and I'm still kind of have a couple side hustles and this and that. And trading doesn't necessarily need to be your one and only primary income source. Like unless I get to a point where I'm literally making, hundreds of thousands of dollars per year for like 2-3 years straight, then I could say, okay, I think I made it. I could wake up in the morning and after the trading session, that's it. That's all. I don't have to do anything else,
Yeah, it's a good point, because, like when it comes down to trading, like once you have a strategy that is profitable, you can only trade for 3-4 hours a day max, and like you still have so much time in the day to make more money if you need to. And like, why not? Like if you have all that time freed up and you have a side hustle that you can like have and do, like having that side income is a really good way to help you make sure that you're trading smart and not just focused on making ends meet. It's a huge factor for traders. So, leading from that, like what's your morning process as far as, waking up, looking at the screens? Like, is there like a morning routine that you have prior to coming to the screens, or what do you do for that?
Yeah. So, I mean, routine is everything when it comes to being a day trader. Basically every morning is roughly the same, and it should be. because we're day traders are creatures of habit. And if we do something that's outside of our habit, it might mess with our day. Maybe it's superstitious or I don't know, but it also stems back to discipline, because being disciplined in the market means being disciplined with the actual trade itself. But being disciplined as a day trader is not just about the trade that you're taking. It's literally about your whole life.
Yeah.
Like ever since, the better I've gotten at day trading, the more I care about what I eat, the more I go jogging and literally stuff like that. So my day, starts at 7:15 in the morning. And I have a couple of day trader friends that I have like a little group chat with on WhatsApp. And, Sean M, you know him, and a few other guys. And literally everyone has a routine. And we say, hey, good morning, guys. And right away they're saying, oh, go enjoy the walk with your dog. And, they know that's what I'm doing. Get some fresh air, circulate the blood by walking, and then come back in, get the coffee going, and then sit down at the screens and see what's popping and why. So reading that news PR, and then kind of narrowing down what I think I might be interested in playing, trading that day. And how I do that is actually based on my statistics. So knowing your numbers is also one of the most important things as well. So what I mean by that is I do much better with stocks that are priced from $5 to $10 versus 1 to 5 or 10 to 20. So if I see 3 or 4 gappers in the morning, 1 million to 30 million float with news PR, with volume, I'll gravitate towards the ones that are priced $5 to $10 more so than the gap up from 1 to 150. For whatever reason, I just can't get a handle on those. So it's like you play to your strengths.
And how do you know those? How do you know that stat? How did you figure out that you're not as good with stocks from 1 to 3 and you're better on stocks from 5 to 10? How did you figure that out? Because for most people, they think that they just know that from the top of their head, but I know that for you, you're more data driven. So did you use a software or Excel?
So it's it's a mix between manual journaling with TraderView. So for those traders who don't know about TraderView, you should know about it, because first of all, the free version, if you're not over trading like a degenerate, the free version is more than enough to import your trades, right?
That's what I use. The free version exactly. Is all I need.
It's all you need. There's a paid version, but like I said, that's like if you're doing hundreds of executions a day. And so manually journaling got me to realize that I wasn't getting a grip on these lower priced gappers. And something, I guess it's also psychological too, but if you have a gapper that's going from $1 to $1.50, $1.75, I know I shouldn't be thinking in terms of money, but in order for me to actually make a decent gain on that stock, I need to use a lot more size in terms of share size, even if it's the same dollar figure. So it's just psychological. Compared to, using 100 shares on a $10 stock versus 1,000 shares on a $1 stock. It's the same thing mathematically, but psychological and, volatility that the stock puts in, I could use 100 shares on a $10 stock and I could do better on it personally. And that comes with journaling, and it comes with knowing what you're comfortable in. And it comes with time, and it comes with, again, it all comes back to screen time, showing up every day. And also those stocks that are $1 and $2, they trade differently.
Yeah.
The order book is much thicker, and the bids and all that stuff, the volume, I don't know, the way that these stocks trade is just very different compared to a low float that's like ENTX the other day, for example, going from 7, all-time highs. And when it pushed to $10, that kind of stuff is my bread and butter. like another short seller that just showed up to the market, they might be seeing that and they might be scared with the way that it's just like rocketing. But because I've been here for several years, I'm kind of watching it and saying, okay, we'll see what happens at $10, you know. And then more often than not, there's always some sellers jumping in at $10, and even, you know, guys like Aston and others, they're unloading their long positions at $10. So you have long bias traders unloading their positions. You have experienced short sellers that are building a core around a $10 figure. It creates double the selling pressure, and then that's how you get that quick wash. It was back in the 8s and 7s within like moments later. So for me, just having been around for a while, I was able to just jump in with my orders and off of that $10 level.
Which brings up that kind of notion of, you know, knowing what other people are doing within the stock itself is a very big edge. Wouldn't you agree with that? Just knowing how people are acting at those levels, you know, round numbers, $5, $10, knowing that people are going to be, you know, locking in profits there, that can give you a huge edge when you're short. So yeah, that's something that you've picked up on pretty well, and like you've used that heavily to your advantage, you know, using that round $10 number, because you do that all the time. Like I see it every stock that runs up to 10, you're shorting 10, and it works out very consistently. Like as far as back to the routine that you have in the morning, right, do you use a lot of scanners, or do you mainly just rely on people talking about stocks that are hot?
So I do have access to trade ideas just to get the morning scan on which low float stocks are currently up the biggest percentage compared to previous close. And then from there, I'll just kind of go down the list. And if it's below $1, I'll ignore it. Usually if it's above $20, $30, $40, I'll ignore it. I'll never say that we'll never trade those, but trying to gravitate towards the $1 to $20 area and try to gravitate towards float between 1 and 50 million. And again, if something's 100 million, doesn't mean I won't trade it. But knowing what your preferences are when you have those scans. And then from there, if it's really, really, really bullish news, I'm going to be very careful about even creating the short plan around it if there is one. And you'll kind of notice that once in a while there are press releases that are very fluffy. They might say things like, oh, the company may be doing this, or we've entered an agreement but the terms will not be disclosed. And stuff like that for me is kind of I kind of take it with a grain of salt. And I've watched a few documentaries and stuff where those kinds of things could be the insiders and executives. They're trying to sell basically shares of their own company to the public. Mm-hmm. And just because there's a positive headline or a positive press release doesn't always mean that great things are going on for the company. It could just be an event to cause the gap up and to attract more buyers to the market. So I try my best to read those PRs and try to see, are they actually bullish, or is there a hidden agenda here?
Yeah, I'm sure that if you also look into like the SEC filings and see, oh, this is kind of fluff news, and they have an offering on the table, they have warrants on the table, that can give you a massive edge as a short seller. So that's something that I think definitely can help in your favor too, like having fluff news plus that.
And just to tell a quick funny story, there was a Chinese company, this was maybe last year or 2 years ago, and it was the first time that I was caught in like one of those halts pending news. And it was over a weekend. So it was a rough weekend because, as a day trader, you want to close your positions usually around 4 o'clock market time, maybe here and there, you might have a little position to scale out in after hours, but for the most part, you're done the same day. So there was this Chinese company, Low Float. The PR was that they acquired a piece of art, like a painting. I don't know if you remember this.
Yeah, I think I do
of
remember this. Wasn't it like I want to say it was like some Picasso painting or something, but they didn't actually
Yeah,
acquire it. Wasn't that something like
yeah.
that?
And like the company wasn't, I don't think it was a company that was in like the art and culture game. Like it might have been a pharmaceutical. I don't remember the
Yeah,
details.
yeah.
So
I remember
I'm
the
just saying
story.
like so it's very sketchy and had an afternoon run and I might have been, I was pulling up the chart. I'm like, okay, let me take a feeler here, off the $10 level, sure enough. And it rips to $12. And I was getting back to those earlier conversations about like not averaging up and not stepping in front of the train with your full size. I was just in with a feeler. So I wasn't averaging up. I was just in the motion of scaling in, the process of scaling in, or potentially about to cut that starter if it continues ripping and then wait to reassess at a higher level. But it got halted pending news. So it stopped trading. You couldn't trade it. And in the back of your head, you're like, oh no, I hope it's not a T12 like Elfin had. Because if it's a T12, then your money is literally frozen for months. Luckily, it wasn't a big chunk of the account or anything. So even if it was, it would have been okay. But to go into the weekend, halt pending news, no resume time. So I'm like that guy on StockTwits and Twitter now, like reading for the speculation, reading for the hype. And if anything, as a short seller, I kind of had a hunch that if this is going to reopen, it's probably going to reopen lower, but probably isn't a guarantee, right? Yeah. So I'm waiting for Monday morning and thinking to myself, oh no, if this thing, and there's no stop losses in pre-market, as you know. So if this thing opens up at 7 a.m. or 8 a.m., I think I set an alarm at 4 a.m. just in case, because some things might start trading at 4. And I'm like, wow, if this thing opens up at 15, like I'm going to lose like a decent chunk of the account,
Be 50% of that position.
Yeah, exactly. So luckily, I think after 8 or 8:30, the thing opened at $4.
Very nice.
and it might have bounced back to like 7 or 8 or something, but I got out like right away, and it turned out to be one of those scenarios where the market, I was in a losing position going into the halt, and the market bailed me out. So
would you say that was a good trade, or was it just a bad trade that happened to win money in the end?
Yeah, it was definitely not a great trade. The starter was okay, but I may have let it get away from me more than one should have. And the market bailed me out, but it made me wait a whole weekend to suffer through those emotions of like, wow, this could open it could open where it stopped at 12, or it could reopen like higher if they actually confirm the news is legitimate and more buyers pour in. Because pre-market is illiquid. This thing could rip to $20 for all we know, right?
Yeah.
We've seen crazier things happen. And actually, in December, so just a few months ago, the same thing happened. It was on UUU, and this is quite funny. But I had the largest trade of my career that day, but it actually came on a very solid trade. But it halted down pending news, and it reopened a couple bucks lower. So the market rewarded me, but it was still a very good trade, because had there had been no halt, it was still like poised to be an all-day favorite. It already put in those signs, but the market kind of rewarded it by opening much lower. And I was waiting for my final cover, like several dollars below my average. And I was at a point where I knew what my record was from the summer of 2018. But if you recall, that was on the back of 2 days where I was just bad habits, right? Letting the market bail me out. And and I know you should never do this as a trader, but I was looking at the P&L and I said, I'm only $5 more away from breaking the record. I'm covering at like 466 or whatever it is. If I cover at 490, I'm only going to tie. So I'm going to And traders don't do that. Don't look at the P&L and let it influence you. But I wanted to break the record on the basis of it being a good trade and not total garbage, you know?
So let me ask you, how much lower did that stock go after you covered?
It was a bottom tick cover, actually.
Oh, really?
It was, maybe like 10 cents lower, and then it bounced. But it was all probably like a fifth or sixth of the position. Mm-hmm. This is another thing I'm working on. Like when I'm doing these bottom tick covers, I'm literally not working with that many shares left. Like I want to be able to bottom tick and have like a good chunk of that, like a third of that position in bottom tick. Mm-hmm. When it's like a fifth or a sixth, you're like, it's like, it's not the greatest, you know, when you're already mostly out.
Mm-hmm. Yeah. So, you brought up something very interesting to me when you're talking about your morning routine and being disciplined. And you said that, when it comes to being disciplined as a trader, you have to also have discipline outside of trading. Was that something that you kind of knew off the bat, or was it something that you kind of learned as you were trying to build up your disciplined trading? Because you said you go on walks every morning, you do your daily routine. When did you figure out that that was a proper and required thing to do to build up that consistency? So the podcast was getting quite a bit long there, so we decided to split it up into 2 parts to make it a bit easier to ingest as a viewer and listener. If you enjoyed this section, then please make sure to leave a like, leave a comment down below if you have any suggestions of topics we should talk about or people we should interview in future episodes. And we'll see you in the next episode. Thank you so much for watching and listening, and hope you enjoyed.